All right, good afternoon, everyone. This is Joe Bacella at Chaikin Analytics, and I'd like to welcome you to our presentation of Sandy's Secrets, Finding Winning Stock Ideas, Timing Your Trades, and Avoiding Portfolio Killers. Presenting today is Sandy Chaikin, co-founder of Chaikin Analytics. Throughout our presentation, please be sure to submit your questions using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. We will be available throughout our presentation to respond to your questions. Now, before we get started, we have a very special guest joining us, the founder and CEO of Wall Street IO, Micah Lamar. Micah, take it away.
Hey, thank you. I appreciate the welcome. Hey, everybody. Micah here. Really excited about today's presentation. I've got one of my good friends, Sandy. She's going to present for us today. And Sandy is really unique. She's got two things that have really made her a successful trader that I wanted to highlight real quickly as we get started here today that I think everybody is going to appreciate. The first thing that Sandy does really well with her investing that has kind of led to her success is she's really good at timing her trades. And she's developed a pretty simple process for it that I'm excited for her to teach everybody today. Timing your trades is one of the most important aspects of trading, as many of you know. The second thing that she's really good at is holding on to her winning trades. And I know it's one of the things that a lot of traders struggle with. You know, a lot of people, once they have a little bit of profit, 10%, 20% profit, they'll close it out in a lot of cases too early. Sandy's really good at holding on to her winners and squeezing out those 100% gainers. And, at the end of the year, when you look back on your trading, it's those big winners that really make all the difference. And Sandy's always been really good at that. And so for those two reasons, I'm really excited about today's presentation. And I'd like to introduce everybody here to my good friend, Sandy Chaikin. Sandy, are you there?
Thank you. That couldn't have been a warmer welcome and introduction. I really appreciate that. Thank you so much. And we're thrilled to be back in your community as well. So we're thrilled to be presenting to you and your Wall Street IO community in addition to the Chaikin community.
Cool.
So feel free to hop in and jump in along the way.
I appreciate that. I will.
Okay, great. All right, so let's start by taking a look at what's going on in the market, because today is a prime example of what a high volatility day it can be. So this is the S&P looking back over February, where you can see the 10% correction that we experienced. This chart was done yesterday, so it doesn't show today's crazy ride where the Dow was down more than 550 points at one point, closed over 400 points lower. But that was all sparked late in the afternoon by Trump throwing a curveball to the market by announcing a 25% tariff on steel imports and a 10% tariff on aluminum imports. And of course, since then, all the economists and market technicians have been talking about, well, what does this do for the economy? Does this spark a trade war? I mean, nobody knows this other than the fact that tariffs and trade wars negatively affect the world economy. So it's not something we're keen to get into, but nevertheless, it is where we are today. So I see this, though, as a buying opportunity. I use these dips like this 10% correction back in February as an opportunity to buy stocks on sale. And that's what we're going to be talking about today, timing. How do you know when to get in and how do you know when to get out? And as Micah said, how do you know when to ride your profit longer? We have some very clear set, I call them rules, but that sounds kind of like a school marm, but they are guidelines for how I get in and out of trades, and I will be sharing those with you with real-time examples of stocks that I currently own or have owned and held in my portfolio. So let's put these pullbacks in perspective. If you look at the average decline of a 5 or 10% correction, like the one we've just experienced in February, it typically lasts no more than 1 month. So look at March as a rocky road. It's likely to be volatile as it was today. And again, I see that as an opportunity. I mean, make your stock list and you can, if you haven't started one already, start it today, get a pad and paper next to you because we're going to be talking about some great stock ideas. But this is when you can buy some stocks on sale. So what's the problem with us as individual investors? The research shows the S&P has grown an average of almost 10% a year over the past 20 years, yet individual investors only average a 2.5% gain. I mean, that's a huge drop from a 10% to 2.5%. Reason being, we're people. We buy on emotion, not fact. And one of our biggest problems is, as individuals, is we let our emotions get in the way. But this costs us. The research also shows that when you run for the exits, as maybe many investors could have done this afternoon, thinking, oh my God, it's the next market crash, I better get out. And they sell, on those 2% drops, but it can cost you 4% a year. Ironically, that was the February S&P was down 4% for the month, which exactly correlates to people running away. It costs money to run. But let's follow the advice of Warren Buffett, who says investors should be fearful when others are greedy, and greedy only when others are fearful. So what does that mean? Investors should be fearful when others are greedy, meaning when people are buying, that's the time to sit back on the sidelines and wait for the pullback. Because when people are buying, they're hiking up the price. However, when they're fearful, like perhaps today, this afternoon, and selling, those prices drop. And that's when you can be greedy, like I was today. I bought JP Morgan today as it was pulling back. And that's the whole lesson to learn. And this is what you can expect by following that discipline. These are the performance of stocks that I'm in. I just sold Progressive yesterday, but all of the other ones I currently own. And I mean, wouldn't you rather be in stocks like this than, say, a mutual fund that underperforms the market, or even an S&P 500 account, which averages for the last year 18%, which is terrific. But wouldn't you rather have 100% return on your investment, or a 65%, or a 73%? I mean, this is all doable. And this is what we're going to be going through today. So what's the point of all this? Well, it's all about making money. And coming from a very conservative Philadelphia family, and given my age, women were not encouraged to talk about money. It actually was a faux pas to really discuss price, what something costs, or money in any respect. So kind of getting over that hurdle, and not only embracing it, but loving talking about money, and loving talking about the stock market, and loving talking about profits has been kind of an about face for me. But the reason it's so much fun is because it turns into celebrations. Mark and I have taken some great trips around the world thanks to the profits that I've made in my trading. So why should you listen to me over the next hour? Well, I've beaten the S&P 500 since I started investing in 2012. And the research shows that 4 out of 5 pros underperform the S&P. So by correlation, I'm beating 4 out of 5 pros as well. I started in 2012 with stocks that I heard of, like eBay, Yahoo, Southwest Air, and Skyworks. That's a chip maker for Apple. And then over the next couple of years, I started investing in what I call these triple-digit winners, these small cap stocks like Centa, Quad Graphics, NACO. These I call them like hidden treasures. They're the stocks me or most of you probably have never heard of. Yet they've had some really big wins, particularly back in 2016. And this year I'm in stocks like AbbVie, which is up 100% over on a year's basis, Lam Research, and Coors. So this is all doable. You do not have to be a market expert like Mark or like Micah to be able to reap these types of rewards. It's all possible. And certainly, my mantra always is, if I can do this, so can you. And it doesn't have to take you all day. I'm working, as probably many of you are as well. So a 10 to 15 minute a day regime is routine, I should say, is is really manageable for me. All right, so how did I get started investing in the first place? Well, it was really through 401k plans. When I worked in New York City, I worked for Elizabeth Arden and L'Oreal, where I marketed their designer fragrances and actually launched one of the most successful men's fragrance ever, Jacquard Noir. Then I moved back to Philadelphia, where I'm from, and worked at the Franklin Mint, which at the time was the largest direct mail house in the country. And all three companies had 401k plans. So I was able to select mutual funds to invest in. And fortunately, the choices include Peter Magellan's Fidelity Fund and Bill Miller's Value Trust at Legg Mason. And those funds did really well. But as the fund was growing and as my career was growing, I felt less and less confident of making those decisions myself, and therefore, at the suggestion of a friend, engaged a wealth manager, and he immediately sold everything I had, put me in 8 or 10 mutual funds of his choice, and that was okay for a while, but it didn't last for long, because along comes 2008. Of course, we all know what happens then, the whole financial meltdown, and in about 6 months' time, my account was down by more than 40%. And this was really a difficult time for me, because I had been calling this advisor along the way, particularly starting back in September of 2008. I can remember exactly where I was when I made that call. And I said, don't you think we should sell? Because things are clearly headed south. And the advice always was, no, just hold the course. It'll all come back. And I didn't see the sense of watching something go down and then just watching it go back up again. But I lacked the confidence, because after all, this was his field, not mine. I mean, he was the expert, and I'd always been taught to rely on experts. I can't be an expert in everything. And this made sense to me to depend on somebody else. But unfortunately, it cost me big time. And this is one of the main reasons I'm here today talking to you, because I don't want any of you to ever have to go through this type of a pain process again. It was just really devastating. That's really the best word I can use for it, unfortunately. And I suspect many of you have had a similar situation. And if you have, just put into your chat box the experience that you've had as well. I'll just take a moment here.
Yeah, if you have any comments about any kind of pain points or challenges you've addressed, feel free to go ahead and chat into the Q&A window. Anything on your mind regarding some barriers you may be encountering, again, the Q&A window is available for you.
So Larry says ×3. I hope you don't mean that you've lost 40% 3 times. That would not be good. Laura says she hasn't been doing it long enough, but sure felt nervous today. Okay, so this is why it's so important to have a disciplined methodology, because that takes the emotion, that takes the nerves out of it. Larry says he's in my 70s. Well, Larry, I feel your pain, but you can make it back up. What I did was took the account back from my wealth manager and put it into an S&P 500 account, and figured and felt that I needed to. It really was a turning point, because it made me be firmly convinced that I had to figure out how to do this myself, that nobody cares more about my money than me. And even if I were to engage a wealth manager again, and many of our clients and members have worked and are wealth managers, and that's great, but you must be involved in the process as well. And don't do what I did, which was merely just turn the whole thing over to someone and say, okay, it's yours now. So stay involved, and get involved and take control. And it's really important we do this, particularly if you're a woman. It's really critical to be engaged in your own financial wealth building and well-being. So I took control of it, and everything's fine now. I'm made up almost 4 times what I had. So it's fine, but it was a painful process going through it. So in the past, when I've asked what the challenges are, the question that Joe just threw out to you all, what we found is that the number one challenge most investors are facing today is timing. When do I buy and when do I sell? With a heavy emphasis on the sell. That seems to be the hardest decision for most people to make, and I totally get that. Another big challenge, trade on emotion. I mean, just as you said about today, you're nervous about today. That's your emotions and your fear getting the best of you. You don't have to be nervous. I was actually excited because I thought, oh, great, this gives me a good opportunity to get in and buy some of these stocks I've been watching. Volatility is back in the game. You know, that to many people is a nervous thought. Doesn't have to be. This can be seen as opportunity, which is the way I see it. And information overload. And I think we all can relate to that. There's just so much going on out there, the 24-hour news cycles and emails and texts and everything coming at you all day long. It's pretty hard to separate what's really important and actionable from, you know, what's just the noise. So what we're going to be going through in the next 45 minutes or an hour is what to buy. How do you know what to buy? How do you know what to avoid? Or what to sell. And of course, timing, you know, the biggest challenge most of us face, when to buy and when to sell. So the platform I'm using is Chaikin Analytics, which is the charts I'll be displaying are from our Chaikin Analytics workstation. And let's get right into what to buy. So we call a winning stock a classic bull. And in order to be a classic bull, it has to have these 4 things going for it. It has to have our power gauge, which is our rating, bullish. It has to be in a strong industry group. And we want the Chaikin money flow indicator to be strong, and we want the relative performance to be strong. And you may say, well, I don't know what any of those means. That's okay. We're going to go through them one by one on the chart. Let me start by explaining the power gauge rating, because this is the it looks very simple here as a rating. It's the rating that Mark created after the 2009 meltdown, when he could see not only my pain, but he could see the literally over $1 trillion coming out of traditional brokerage firms going into self-managed accounts like I did in Vanguard, Fidelity, Schwab, whatever. Those were us investors who were really disillusioned with Wall Street, and we're saying, okay, we've got to do this ourselves. Yet, as Mark pointed out, you don't know what you're doing. You don't have the education and you don't have the tools. So he had sold his company to a division of Reuters, had been in retirement for 10 years. But in 2009, he said, look, I'm coming out of retirement because my 40-some year career on Wall Street was creating tools for professional and institutional investors so that they could make better decisions about what stocks to buy for their clients. And he said, I'm going to take that knowledge and boil it down into a format that someone like you, Sandy, can understand, that it's simple enough that you don't have to be a Wall Street pro to figure it out. Yet you're going to have the same tools, the same data, not only data, but you're going to have it analyzed for you that the pros have, so that you too can make great decisions about what to buy and what to avoid. So the culmination is really the culmination of Mark's life work. It is the Chaikin Power Gauge rating. As you can see here, it's a very simple rating. It goes from very bearish to very bullish, but it takes the data on the right and boils it down to what you see on the left, which is a very simple but not simplistic rating. It has 4 main components, as you can see here on the left screen. And what it does is it cuts through the clutter. You know, information overload is one of our biggest challenges. How do you know what to depend on? How do you know what's real and what's just noise? Well, the Power Gauge has gotten a lot of great reviews and endorsement not only from our friends like Michael Lamar, but also from John Carter, who says there's a lot of hyped up tools out there, but a single tool that combines 20 technical and fundamental factors to anticipate a stock's profit potential got my attention. It's called the Power Gauge Rating. At first glance, I thought this looks like an objective, awesome meter for stocks. And it includes fundamental and technical analysis. So there are 20, as John states here, there are 20 factors that are rolled up into this model. And here are the 20 factors. So what Mark did, and it took him over a year or so to do this, he took the 200 or so factors that the Wall Street pros look at every day when they're, not every day, but they look at when they're evaluating a stock. And he boiled it down to 20 that after testing proved to be the most reliable in identifying a stock's potential to out or underperform the market over the next 3 to 6 months. So you see here back in June, Applied Materials, AMAT, had a very bullish rating. It still does. This is a stock I've owned for most of 2017, to Micah's point, and one that is I'm staying with for the long haul. But the 20 factors you see on the right are broken down into those 4 components. So if you're an investor, kind of a value investor like Warren Buffett, you might lean more heavily towards the financial factors. If you're someone like Jim Cramer, he relies heavily on earnings. So you can pattern this as you like. You can look at the overall rating, which is what I do, and for me to want to buy a stock, I want that rating to be bullish or very bullish. But I do drill down on these ones that I've outlined in red.
Hey, Sandy.
Yeah. Oh, Micah, go ahead.
Hey, how's it going, everybody? Mike here. I'm just kind of listening in, and I wanted to highlight something here on this page that I really like and I think is important. These 20 factors are really important, and I know it's easy to kind of think, oh, 20 things, like he picked them at random. He didn't. Like, these are 20 things that he has spent literally a lifetime perfecting, because they're really important factors. And for anybody individually to go out and try and want to research even just one of these 20 factors could take, an hour or several hours. And the fact that he's been able to put 20 of them all together into this nice, easy to follow signal is just really incredible. And I kind of wanted to highlight that really quickly because, for everybody listening, you may not know like how much work actually went into identifying these 20 things. So
great. Thank you, Mike. I appreciate that input. So I look at the overall rating. I look when we're in earnings season at the earnings component, particularly at earnings surprises, because if there's earnings surprise that's say very, very bullish, it tends to indicate that stock is likely to beat analysts' estimates when they report. And that can, of course, spike the price up. So that's really how I use the Power Gauge rating. I also like to look at the short interest. The short sellers are considered the smartest people on Wall Street. So if they're shorting a stock or selling it before they own it, they're betting that stock price is going down. I don't want them shorting a stock that I'm interested in. Same with insider activity. Who knows better about a company than people who work there? So if the insiders, the management team, is buying up their stock, they're only going to buy that stock for one reason. They think it's going to be going up. So, and cash. I like a company to have cash either through free cash flow or a good price to sales ratio. So other than that, I really don't drill down on any of the other 20 factors. But as Micah says, I rely on the whole kind of algorithm to guide me, and it is remarkably reliable, the Power Gauge rating. So why should we depend on models over humans? We certainly get a lot of advice on the TV every day. How is a model different? Well, this one analyst who's well regarded says models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. And I think we can all relate to that, particularly today, starting at what, around 2 o'clock? I think that's when Trump came out with this tariff announcement, and all hell broke loose. I mean, that's why it's so critical to have a model to support your decision making rather than an, oh my God, what's happening? So the model is not only dependent on by us, but NASDAQ approached us back in 2013. They asked us to create indices that overlaid the power gauge rating, which we did. Those 3 indices have outperformed their benchmark since inception in 2014. That got the attention of New York Life's Mainstay Investment Division, and they then licensed those indices so that money managers and their clients can now invest in a portfolio of stocks based on the Chaikin power gauge. So there are actually ETFs out there that have had the input of the power gauge rating, and they're managing money. So it's not just us that are saying this is a great model. It's also used by pros and quoted in the media. Mark was quoted again today, which is pretty much a weekly, if not twice a week, occurrence that the reporters call Mark for his insights into the market. But we've been written in really all of the financial publications, and some of the biggest hedge funds, Soros and Paulson, use the power gauge rating as well to make their decisions. And Jim Cramer, there's a lot of you on today from the Cramer world. Welcome. Mark spoke at Jim Cramer's symposium in New York in the fall, and then Jim and Mark gave a incredible kind of fireside chat on January 31st. It's recorded and on our website, and it's really, if you haven't listened to it, it's really impressive, talking about the market, what to look at, what stocks they see. But Jim says the Chaikin Analytics model is the best. He's used it at his old hedge fund. All right, so let's look at a couple of examples. This is a classic bull, a stock that I currently own. The yellow arrow is where I bought it. But let's start from the bottom up. The bottom, the green ribbon, is the power gauge rating. So as you can see, it's pretty much been positive for a good year. Right above that is relative strength. And what this means is green-red heat map. When it's green, it means the stock is outperforming the S&P 500. When it's red, like it was earlier, it's underperforming. If you're buying a stock, you want that stock to be outperforming the S&P 500. Otherwise, you should just go with an S&P 500 index fund and be happy with that. But if you want to get these outsized returns, like AbbVie, which is up 100%, or Coors, I think this is up 60-some% on a yearly basis, you need that stock to be outperforming. Now let's jump up. I'll come back to overbought, oversold, but let's jump up to Chaikin money flow. So you see these big green mountains of green. What this means is that institutions are buying. Mark created this technical indicator some 35 years ago when he was on Wall Street. And what this does is it measures the money the pros are investing in a stock. So when you see these big chunks of green, it means the institutions are buying. And just like in any market, free market trading, when there's a lot of demand for something, the price, guess what? It moves up, right? If there's less demand for something, the price tends to go down. But you can see what happens with this green correlation here in price. The price tends to ratchet up. And that's exactly what's happened with this stock. Since everything turned to green in, when was this? Around August. And you can see what happens once everything turns green. The price just takes off from 40, and it's up now over 63. So I bought this back here on this pullback in early February. Remember those several days in like February? I think it was a Friday and a Monday and a Tuesday, the 5th, the 7th, and the 8th, where these massive moves, over 1,000-point moves. in the Dow. I mean, it was incredible. What I did was I put limit orders in because the market was so volatile. I said, well, let me just put some really low prices in and hope to get this on the cheap. And I did. I got it at 60 from that limit order. And you can see the next day or so, it did trigger these little green triangles are buy signals that we have on our platform that's really helpful in identifying time. So that kind of confirmed this is a good time to buy this stock, which I already knew since the price was way down. But you can see I wasn't nervous with all this green. And by the way, just a little tick of money flow to red is nothing of any consequence. Everything went to red because all of the ETFs and mutual funds were on those automated selling, algorithms, and they were just selling stuff. It had nothing to do with the opinion of the stock. It was just these big buys that just kept churning through. So most stocks went to red in February on a money flow basis. But you can see that I had the confidence, I had the conviction to say, oh man, I'm going to buy this now, instead of freaking out and thinking, oh my God, I can't buy this stock. It's just gone down 10%. So you can turn your whole thinking around and use it to your advantage. And that's what I want you to start really focusing on today, because that's the advantage, of having these guidelines and a disciplined strategy in your arsenal. So AbbVie is another strong stock. You can see it has been bullish for really most of the last year, a little bit of changing over to neutral, but look at how strong money flow is. I mean, since May, money flow has really kicked in, and really since May, since May, the relative strength has kicked in, but also the money flow has kicked in as well. And you can see what happens once those three indicators, power gauge, relative strength, and money flow, line up and turn, and look at the money here in September, and turn really positive, then you really get on a roll. So that's the pattern to look for. This is what you want to buy. This is a winning stock. So again, I bought this stock on that big pullback on February 7th. Again, I put in a limit order. The stock had spiked up the day before on earnings. These little EPS things tell me that the stock reported. If it's green, they beat analyst estimates. If it's red, they disappointed. When they beat, like they did, the stock tends to spike up in price, which you can see it did. It spiked way up here to over 125 or so. But then, like everything else, it had that big pullback in early February. I put in a limit order, really lowballing it at 102 and 10 cents, and I got it. Later in the day, it went up to 113. So that's how you can use volatility to your advantage. Just get these stocks on sale. I mean, how great is that? I love bargains, and I love to buy stuff on sale. So for me, this is like really fun shopping. So you can make magic out of the turmoil. Now, there's another Sandra who uses our platform, Sandra L. She said, and this was in late January, her 401k plan was up 47%. In 2017, she couldn't have accomplished that without the help of the entire Chaikin team. Sandy's encouraging words, "You can do this, and here is how," was so empowering. My husband has confidence in my judgment. Thank you, Chaikin, and I feel empowered. Life is good. So I love this because I do repeatedly say, you can do this. If I can do this, you can do this. I am not a Wall Street guru like Micah and my husband, Mark, but I can do this. And you can empower yourself. And again, I circle confidence. The system gives you the confidence to pull the trigger, make that buy decision. All right, so how do you find some of these stocks? There's a couple of different ways. The easiest, of course, is to listen to Mark. For our members, he puts out a market commentary letter every Sunday night. It's full of great kind of insights on what happened in the market this past week and where he sees it headed. And he always has specific stock ideas. And late January, for instance, he had JP Morgan Chase at 116. This is a stock I bought today. Again, it was on sale today. Another way to get stock ideas, we have what we call the stock discovery engine. It's like a Pandora for stocks. You seed it with a stock, which I seeded here with Coors, the bullish example we just went through, and it'll tell you stocks like Coors. And then you can click on any of these tiles here and go right to the chart. So this is another great way to kind of scroll through stock ideas if you like a particular one and want to find something that's similar to it. I mean, use it like you use your music. The other thing which I rely heavily on is our screener. And it's a very simple kind of dynamic here, but it's really powerful. You can put in criteria that match your criteria, match your investing style and requirements. And it will filter through the universe, whatever universe you've picked. For instance, I picked the S&P 500 on this example that I ran yesterday. And then it will only show you stocks that meet that criteria. So in a matter of seconds, it really took a universe of over 5,000 stocks that we monitor. Started out with 498 in the S&P 500. When I plugged in, I wanted the power gauge rating to be bullish. I wanted the price to sales to be strong, earnings surprise because we're still a little tagging into earnings season, and the short interest. I don't want those short sellers shorting the stock I'm interested in buying. And like a classic bull, I want money flow and relative strength to be strong. So when I plug in all those, I get 13 stocks. I've gone from 5,000 stocks to 13 in a matter of literally 30 seconds. I can save this criteria. So all I have to do is go into Screener, hit my file folder, hit this particular stock screen, and hit screen, and there I go. But there's some great names on here, stocks that are on my watch list. Express Scripts, Huntington Ingalls, Micron Technology, that triggered a buy signal today. So this is a great way as well to get some stock ideas. So there's a number of ways you can do it. But all of this saves you time. And as Cheryl says here, she's an individual investor and trader, and there's not enough time in the day to do the work Chaikin puts before me in minutes. I'm wowed. So it's not just the power gauge rating that's going to save you an enormous amount of time, but the platform in terms of using that screener, using that stock discovery engine as well. All right, so let's look at what we got to avoid, because it's just as important to avoid those losers or know when to get out as it is to identify those winners. And again, it's just the reverse of what we found with the classic bull. But again, let's go back to Warren Buffett, one of the greatest investors of all time. Very simple, avoid risk whenever you can. Makes sense, right? Well, it does make sense, but you can't avoid it altogether. Excuse me. And that's something I always stress, because when I first started investing in 2012, one of the hardest things for me to get used to was that there is risk involved and I was going to lose some money. What you want to do, obviously, is have more winning trades than losing trades. But understand that in any type of investing, you are going to have some losing trades. And once you accept that fact, then it's okay. You just want to minimize that. So here's the type of stock you want to avoid. Or if for you, those of you out there who trade options, these are like primo candidates for options. And Joe and his team give our members 2 dedicated options sessions a week, 1-hour sessions, where they walk them through how to use our options play overlay on Chaikin to identify winning options trades. But I know what they do is they focus on these bearish stocks. You can see this stock has been a bearish rating since August. Relative strength is underperforming the S&P, and money flow is, for the most part, coming out. And these red triangles indicate sell signals along the way, which, again, are really great timing tools for options traders. Or certainly if you owned this stock and you looked at this scenario, you'd say, I don't want to own this stock. I'm getting out of here, right? And get out of here before the next earnings too, because this is not a pretty picture. How do you get some of these ideas? Again, let's go back to Mark, our guru. And in that market commentary, he has stocks to sell, you know, ideas to trade options or short sales. Albemarle was a stock at 131 that he said was a stock to sell or trade a put option on back in early January. And here's Albemarle today. It was what did I say, 113? It's 95 today. And I dropped down the power gauge rating, which you can do by this little arrow over here on any chart, so that you could see the four components, and you could see that earnings is as bearish as it can be. And they reported yesterday. So looking at this scenario, looking at all the red down here that has been consistent since December, this is a pretty solid argument for this stock is going down, and likely going to go down after they report earnings as well. Even though they did beat analyst estimates, they must have had poor guidance, because it's dropped, and it dropped actually 10% yesterday, and it dropped another 5% today. So these are the type of stocks, if you're long them, you want to get out before this pattern persists. And these sell signals also help get you out. But certainly identifying this classic bull pattern is critical. All right, I want to spend the most amount of time on timing, because that's your biggest concern. We're going to look at when to buy, and we're going to look at when to sell. And in both cases, we've got buy-sell signals. We've got 6 pairs as outlined here. I've been pointing them out along the way. And we've got this oversold indicator, which I have been pointing out, but saying I'll tell you about later. So now I will tell you about it. But let's focus in on what we're on buying at first, and then we'll go into selling. So there's a couple things I use when I buy. I love to have a buy signal trigger. I love the stock to be oversold, and I'll explain that. And if I'm going to buy something, I want it to have that classic bull pattern that we've just gone through. Strong power gauge, strong money flow, strong relative strength. This is a chart by Dr. Wyckoff, who created this back 95 years ago when he was teaching students about the stock market. And at first glance, I got a bit confused, but now I love this chart, and I think it's really helpful to identify the way a stock price moves. And this holds water today. This is the way stocks go up. They don't go straight up, they zigzag. And then they spike up, they pull back, they go up again. Understanding that this is the pattern a stock price takes is really critical to identifying when to buy, when to sell. You want to buy it on these troughs down here when there's less expensive, and understanding that this is the pattern will really help you with that. And we'll walk through a couple of examples. But first of all, how do you know when those buy and sell signals trigger? We have what we call an alerts view. You can overlay it on any chart. Part of my 15-minute routine every morning is to overlay the alerts view on my stocks list, and then on a list I call my watch list, stocks that I'm keeping an eye on. And since we've had such recent volatility in the last month, I have a really short list as well of like 5 or 6 stocks, my most promising buy candidates. That was where JP Morgan was that I bought today, from that list as well. So, you know, at my fingertips, I have these. I overlay the alerts view on those 3 charts every morning and every night, and I scroll through the charts. That's it. I look for things that have changed, but this highlights things that have changed, including the sell signals, sell and buy signals that you can see here. But it will also alert me to other things that can affect a stock price, like if a power gauge rating has changed or an analyst earning estimate has changed. These things can have a big impact on an upcoming price, and I want to know about that if it's a stock I'm watching or owning. So let's take a closer look at one of these, Marlin, who has the oversold buy signal today. And keep in mind that Wyckoff pattern, all that zigzagging, right? Let's look here. You can see it's been zigzagging kind of where this yellow arrow is, straight across. Then it breaks out and it shot up, did the peak, did the pullback, did the zigzagging across again, and now it's pulled back again. If you go back to that, let's go back to that here, the Wyckoff chart. This is what we are looking at that breakout, the going across, then it shoots up, pulls back, shoots up again. Let's go back to our stock example, but see, this pattern is right in here and in here again. And now it's pulled back and triggered this oversold buy. So what's overbought, oversold? Okay, let's go through that. That's this indicator here. And this basically patterns itself after the Wyckoff. It basically charts the Wyckoff movement. And what you want to do is look at below 30 when you go to buy. The 30 or under represents that trough, that dip. That's when you want to buy it because the price is pulling back. If you own it and go to sell it for a profit, for instance, you want to sell it when it's up here, up around 70. And this helps kind of measure or plot out for you the peaks and the valleys. So right now it's really pulled back, and that's it hit the criteria to trigger this oversold buy signal on the stock right now. So you've been looking at a couple of charts now. Is this a stock that would be a good candidate for you to buy? Maybe use your chat window and just say buy, hold, or avoid. And let's just get a sense of how you're all seeing this. I'll give you a second to plug that in. Oh, we've got everything. We've got everything going on here. We've got some buys, we've got some holds, we've got avoids. Okay, let's take a closer look. I would say this is a good buy candidate. The power gauge rating is bullish. Relative strength is kicked in. Money flow has kicked in. It's pulled back to a really deep level, and this was as of this morning. So this is probably pulled back even more as of the close tonight. And you get this buy signal. So everything's going for you in the favor as a buy. You might want to put it on your list and just watch this, MRLN. Just watch it for the next couple of days. So let's look at when to sell. The buying is pretty easy. It's the selling that can get tricky. And there's two scenarios. Either you're going to take a profit or you're going to sense that stock is breaking down and get the hell out. So taking a profit. Here's my guidelines for when I take a profit. Price hits that upper volatility band, and I'll explain that on the charts. It's overbought, so the price is spiking up, indicating a top price, which is obviously where you want to sell it, or it spikes up after a strong earnings report. And as we all know, stocks can be incredibly volatile during earnings season, which we've just been through, and they can spike up as much as 10, 20%. And when that happens, you say, thanks a lot, I'll take the profit and run, which is what I do. So here's an example of a stock I own, Center. This is one of these small hidden winners that I owned for a good part of 2017, but it had been on my watch list. This yellow hour here back in September with the buy signal, it's telling me relative strength is kicking in, and you can see that it did kick in indeed, and power gauge was bullish. Money was coming in nicely, so I bought that stock back in September at 35. And note again the Wyckoff. kind of was going sideways, right? And then it starts shooting up again, and it shoots up and then it pulls back. It shoots up, pulls back, goes sideways. This is the pattern that most stocks travel on. They reported earnings, and I knew from looking at previous earnings that they tend to spike down and then up. Don't ask me why, but that's what they do. So follow the pattern. They go, they exceed analyst expectations, but they go down and then they spike way up. So when that happened here, I didn't panic. It spiked, they reported, they exceeded, they had great guidance, but it went down. It's like, you can't ask why, it just is. But I expected that because I was looking at the pattern. But I didn't freak out because everything was green. Everything was green. And I knew by looking at the pattern that a couple of days later they spike out back up. And lo and behold, they did. So I just watched it. It spiked up above these little white kind of chalk lines are what are Chaikin volatility bands. Mark created them to show typically the range that a price stays in. And I'm a sailor. I grew up on boats and sailing. And so I know when I get out of a channel, I can run aground. I can hit some underground object and have a problem. So staying in the channel is a good idea. And if it spikes up above that outside channel marker, chances are it's going to pull back. So this is a great time to say, great, thanks. I'll take my profit. I sold it at 40 and I made a 14% profit in 10 weeks. That's pretty good, right? And then the stock really is kind of starting to break down. You get these sell signals, you get poor money flow, relative strength, underperforming, goes to neutral, and you get 3 sell signals, including one today. So that's the pattern, though, that your eyes will get used to when you're reading these charts. And once you become a member and are looking at these charts every day, you'll know in a second. I mean, you'll look at a chart and you'll know immediately whether it's something you want to study further or skip over or take action on. So let's look at another stock. This is a stock I took action on yesterday, Progressive. I bought it here again on a buy signal, an oversold buy signal. So I knew it was pulling back, it was going under that 30 on the overbought, oversold. So the timing is ideal. There's a little bit of negative money flow, but a little bit like that isn't something to really worry about. And I knew they were coming up into earnings. And I figured with a very bullish power gauge rating, and I checked the earnings component, which was very strong, that this would have a good chance of exceeding the analyst expectation. They did, and they went up, they pulled back, and then this, of course, was, you know, right in the whole February kind of meltdown, the 10% correction, and then it went back up again. And yesterday it went above that volatility band and hit an all-time high. So I took the profit. I sold it at 58, and I made a nice 6% profit on what was that, 6 weeks, 8 weeks of holding it. So I saw the money going negative, and it was going negative for a couple of months. It didn't flip over recently to green. So I thought, well, I'm just going to take my profit. So that's the type of thinking that I go through when I'm evaluating these stocks and what to do, how to take action now or not take action. Okay, let's go through another one. This, again, is a stock that I recently sold. I took a 25% profit when it spiked on earnings. I bought it back here on this yellow arrow back in September. Again, I got a momentum breakout buy signal this time. And it was oversold. See, it was dipping down, and everything had just turned green. Big money flow coming in, and I love money flow. So when I see that big money flow, I'm equally convinced it's a good time to get in. And they were coming up to report earnings pretty soon, and I could see from past earnings that they had exceeded. And they did exceed this time as well. This time, this was one of these stocks I just held on to because it was just doing everything right. But it did come up against this upper volatility band in, what was this? Yeah, February 9th. I mean, this was right after they reported earnings. February 9th, that was right in those days when all hell was breaking loose and we're getting that 10% correction. Instead of getting a correction, though, this stock spiked up on earnings and hit that upper volatility band. So I took the gift horse when I got it and made my 25% profit and said, thank you very much. In some cases like this, you can't wait for it to be oversold. I had to sell it when it was not ideally at the sell, but the earnings kind of overrides that overbought, oversold condition when you're making that kind of decision. Okay, the other time to sell is when you sense a stock is breaking down. And that happens when power gauge turns neutral and another indicator like money flow or relative strength turns negative. Certainly if you get a sell signal or the price drops below that orange line, which is a 200-day moving average, or that lower volatility band, or the channel as I call it. And again, you look for this Wyckoff pattern, which is the exact opposite of the Wyckoff, pattern on the bullish side. So again, you want to sell it though when it peaks up. You don't want to sell it when it's down here because inevitably it's going to go up a little bit. So you wait for these patterns to present themselves to sell at the ideal time. The best example I have is this Maiden Holdings, which goes back to 2016, 2017, which is where this chart is from. But it is the best example I have of a stock breaking down. I'm usually out of a stock before it starts to break down, which is why I don't have many examples to show you on this. So this one stands the test of time, though. So this I bought back in December of 2016. In here, it was oversold, big money, relative strength, power gauge rating, everything green. Looks good, right? Up. Goes up. February of 2017 hits this upper volatility band. And I'm looking at this chart in my 15-minute routine every morning. I see that money flow has turned negative like the day before. I see that it's up overbought, which means it's bumping up on a high, on a peak, and it certainly is at that volatility band. So I said, well, this is great. I'm just going to take my profit and be happy. So I sold the stock that morning at 19. The next day, they pre-reported, or 2 days later, they pre-reported their earnings, saying that they were coming out with a disappointing earnings. The stock dropped 10%. They reported a week or so later, dropped another 10%. And then has been breaking down ever since. And this goes through July of 2017. But you can see the pattern now, right? You can see what happens. And this is the stock today. This stock chart goes back to April of 17, and you can see you get sell signals along the way, you get disappointing earnings at every turn, and you get nothing but red or neutral. Little bit of ticking to green here in January, February, but now it's back to neutral, negative relative strength, negative money flow. They reported a disappointing earnings report, which is no surprise because here's the earnings component of the power gauge rating that I dropped down on this chart so you could see it. Earnings surprise, one of the few factors I really drilled down on, very bearish. So going into their earnings report yesterday, did I expect them to disappoint? Absolutely. If I were an options trader, that would have been a great time to put on a put position. And the stock did disappoint, and it's dropped 16%. from when they pre-reported. So this stock is down down to like a third of what it was when I sold it. So those are the breakdown signals. That's what you look for, and that gives you the conviction to pull that trigger, sell that stock, put your money into a stronger stock like a JP Morgan or a Boeing, or I mean, there are plenty of great stocks out there right now to focus on. So here's Norm, one of our happy members. He says, through following your excellent system, his portfolio stands in excess of $1 million. Before Chaikin, I would make money and then lose it. Consistent earnings, and I love this because it again reinforces the consistency. Consistent earnings were just not a reality for me. Chaikin has changed all of that. I can't thank you enough for your tremendous service and excellent methodology. So bottom line is you need a methodology that you can follow that takes the emotion out, so you will have consistent earnings as well. So let's recap what we reviewed today. And this is the disciplined approach. This is the methodology that you can follow as I do. You got to know what to buy. You know, that's that classic bull pattern. And how to find them. You know, that's by market commentary that Mark puts out, or the screener, or the stock discovery engine, seeding it with the stock you really like for instance, Boeing or Coors. What to avoid or sell. That's identifying that classic bear pattern. So you can sell that stock or avoid it before it really drops. And of course, the all-important timing, when to buy and sell, using the signals, the overbought, oversold, using the indicators to help guide you. Certainly the red sell signals are really helpful, but so is the power gauge rating, the relative strength, the money flow. When those things all start turning neutral to red, it's time to leave the party. And when you leave the party in time and make profits, then you can really have some fun. So think about where you want to spend some of your profits and have a reward. That's what I do. I say, okay, so now I'm saving money because Mark and I are going to Florence and the Umbria part of Italy in May. So this is all, you know, thanks to these profits that I've been making. But it's kind of fun to put something specific on it so that you're working towards something. Of course, I put money towards the retirement account as well, but I got to have some fun along the way. So all of this is possible by Chaikin Analytics, the charts I've been showing you today. We have won the 2017 Benziga Global Award for the Best Stock Idea Platform, and that was really that because of that stock screener, that you know, Pandora for stocks is what we call it, stock discovery engine. Ken's gone from 235,000 to 1.2 million in 7 months. He wrote this in July. He's been trading options for many years without much success. On January 4th, is a year ago, I found your system. I started the year with 235,000. As of today, which was the end of July, my net liquidation is 1.2 million. I would have not have been able to achieve this without your system. So one of our team members, Harris, got this from Ken just a couple of weeks ago, or I guess exactly 2 weeks ago, February 14th. He was making a comfortable $20,000 a week on my way to $1 million a year when I got caught in this correction. That's that 10% correction. But having confidence in Mark's forecast, I may still make $1 million this year. So these are not made up. These are people Joe talks to every day, and our customer success people talk to every day as well. But the platform, just to review what the platform comes with, it's the power gauge rating, that 20-factor model, the discovery engine, you know, where you can seed it with an idea and get similar stocks, the screener, which we went through, the options play, it's an overlay that gives you low risk, high reward option strategies. And Joe will take you through how to use that when you become a member. And the platform usually sells for $2,195 a year, but we're taking $300 off as a webinar special when you subscribe by midnight on Sunday. But we're going to add something else to the pot. So if you can just stay with me for a few more minutes, we're pretty much right on time. Marie wrote this at the end of the year when we came in after Christmas. This letter was waiting for us. I'm a relative novice to the stock world. However, I was able to exceed my expectations of return during my first year as a subscriber. After watching Sandy's 5-step method several times, I felt that I could learn this procedure. Thanks to Chaikin, I absolutely love delving into the market. Never in a million years did I think the stock market would become my passion in retirement. Chaikin has made that happen. And this mirrors how I feel as well, because it was the stock market was always something I was very fearful and nervous about. I felt it was far too complicated for me to ever understand or get a grasp on, and that I could never master it. But since 2012, I honestly have really enjoyed taking control of my financial future. The incredible rewards of feeling confident and empowered that I never had before. But it's also fun. I mean, it's really fun making money. So I encourage you to do the same. We have a lot of free bonuses that come with it. The intraday chart, which I really didn't go over, but that was particularly very helpful to me this afternoon when I was watching when to buy JP Morgan. I could watch it literally minute by minute on my chart and know when to pull that trigger and hit the buy button. Earnings, this does drop down to give you details on earnings. I was just highlighting the green for they exceeded and red for they disappointed. The market insights, that's Mark's weekly commentary put out every Sunday. It's compatible with iPhone as well as Workstation. And then this is really a great benefit that I always take great pride in pointing out. And Joe has a team of other specialists with us that take you through these small group tutorials. So when you become a member as early as tonight, you will be put into a small group tutorial as early as tomorrow, walk through the system, how to set it up, how to set up your list, your watch list, your stock list, how to get those overlay the alerts view so you can see the signals on it. How do you use the stock discovery engine? How do you use the screener? It's unlimited training for you to get up and running, because our success depends on your success. And we want you to be successful. But it's unlimited. And as an added bonus, we have one-on-one coaching. So if you have a particular type of trading strategy and you need some help in just integrating Chaikin into your own methodology, all you do is schedule a 1.5 hour one-on-one with Joe or one of his team members, and they'll get on the phone with you and walk you through that. So I think that's a really extraordinary bonus that we offer, and I like to highlight it. So I told you I'd be offering you something extra. So not only we're going to take $300 off, but we're starting something new, which is kind of exciting. It's called Sandy's Inner Circle. So what this is, and you will be the first to experience it, is that you'll get a four-week free membership to basically look over my shoulder on 4 half-hour sessions in March, starting next Tuesday. If you can't make that time, no worries. We send you the video replay. But you'll be automatically enrolled when you subscribe by midnight tonight into these Inner Circle, and it will just reinforce everything that we've just been going through today, because I know it's kind of been a whirlwind and I've had to go through it quickly to get through it, and I didn't even get through everything that I want to. But these sessions give us a little more time together. You can ask questions, and I'll do it in real time so you can really see how I use the platform. So that's our offer to you. I think Joe's putting up the offer in the chat room as well. And Micah, I want to thank you again for inviting your terrific Wall Street IO audience to the presentation. And we're looking forward to your presentation to our audience next week.
Yeah, thank you, Sandy. This is really great. I love this thing that you did here at the end with the big bonus you're doing. The fact that people can kind of look over your shoulder, not just on one occasion, but you've got, four of them for everybody, and that you're giving out the replay. This is a really good opportunity for everybody, not only to get up to speed on the platform, but also just see, like, in the real world examples, like how you apply it to your investing. So I think that's really great that you did that. I appreciate you doing that for our group.
Well, it's kind of fun, and it's the first time we've tried this, so we'll welcome the feedback. We'll subscribe you as well, Micah. Maybe you'll do me the honor of attending as well and letting me know what you think.
Great. Thank you. I appreciate that.
Okay,
And I
great.
also just want to let everybody know that, the Chaikin Analytics platform is a really great addition. Whether you're using Wall Street IO right now or not, the Chaikin platform is a really good addition to your investing and trading. I highly recommend it. I've personally been a subscriber for, I think, 3 or 4 years now.
You go
And
back further than that. I think
is
since
it further?
2014. Yeah, I think
Since
4
my kids
years.
were born, time has just been flying by. So it's been a
Yeah.
while. And there's only a few resources out there that I use, and Chaikin is definitely one of them. So I highly recommend everybody jump on this offer. It's a really great deal. And the fact that Sandy is willing to give away her time like this is a really nice treat. So thank you for that.
Micah, thank you. And as I should mention as well, there's only one other system I use, and that's yours. So I do check
Awesome.
your work when I'm making decisions as well. That's the only outside resource I use. So they do complement each other really well. Okay, great. So Joe, do you want to wrap this up for us?
Hey, yeah, sorry about that. Just responding to the last few questions that came in. But yeah, absolutely. So we want to thank you all for joining us. A big thanks to Micah. We always love having him on our presentations. As Sandy mentioned, I did provide a link to where you can access Sandy's offer. Again, that's $17.95 for a full year to Chaikin Analytics. Once you click on the link, chaikinanalytics.com/Sandy, it'll take you to a quick, nice and easy checkout page here with discount already applied. We have one more webinar that we're hosting this week. That is the onboard session. It's perfect for each one of you to really know the ins and outs of our program. Plus, we're going to cover a few things. So in other words, creating a new list, understanding the analysis in the program, making sure you know your way around. There was a question that came in regarding the screener. Do we have the ability to screen for stocks? Yes, we do. And we'll show you how that works. So please make sure to join us for that. First of all, take advantage, though, of Sandy's offer, $17.95 for a full year to Chaikin Analytics. Give us a call at 877-978-6257. Or you can just go right to chaikinanalytics.com/Sandy, and we'll go from there. So in the meantime, though, again, big thanks to Michael Lamar for joining us. Thank you all for watching our presentation today. Till then, have a wonderful evening, and we will see you on tomorrow's onboard session.